Tata Elxsi has outperformed KPIT Technologies over the past year, but is the higher valuation warranted? And how do the business prospects compare? Agam is standing by to tell us what analysts prefer and why. Agam, why did you think of doing this?
Well, I was actually looking at technology companies which cater to advanced driver solutions as well as driverless cars, and KPIT Technologies and Tata Elxsi are the two companies which cater to it. And contrary to what one may think, in terms of revenues, KPIT Technologies is actually bigger than Tata Elxsi. So they garner more, but its market capitalization is half of Tata Elxsi. So it came across as a very interesting point. I started digging in, and some very interesting variables coming through. So I'm going to start off with, of course, the comparison. So over the last 12 months, we've seen Tata Elxsi advance by around 9% against KPIT Technologies, which is down as much as 6%. Do remember that KPIT Technologies has been listed on the exchanges for only 1 year. This was when the demerger from Birlasoft happened last year. So in terms of revenue, outlook as well, what are analysts factoring in? Well, from FY19 through FY22, a lot of these analysts are expecting 14% CAGR for KPIT Technologies, where its FY20 revenues are estimated to be around a little less than 2,200 crores. Tata Elxsi, which has a higher market capitalization, is only expected to grow as much as 8% on a CAGR basis in the same period. That's where its revenues stand at around 1,600 crores. So clearly a 1,000 crore difference between KPIT Tech as well as Tata Elxsi. Let's move on and talk about operating margins. Here, of course, Tata Elxsi has an upper hand, certainly. It's expecting about 21% operating margins, but we're also looking at a potential drop around well over 5% on year-on-year basis because of the fact that we had a relatively volatile time for Tata Elxsi. KPIT Tech, on the other hand, we're expecting EBITDA margins to expand by as much as 250 basis points to around 14.10%. Moving on in terms of return ratios, again, this is the reason why Tata Elxsi may be enjoying higher valuations is because its return on equity and return on capital employed stands at 23% each. For KPIT Tech, it's barely 15% for return on equity, and ROCE is at around 14%, which comes down to earnings estimates, and rather price to earnings estimates. So Tata Elxsi is currently trading at a significant premium of around 28% as against KPIT Tech. If you consider all these factors, sure, the Tata Elxsi has certain reasons as to why it may warrant a higher valuation, but it doesn't mean that it doesn't mean that KPIT Technologies is not picking up. And that's the reason why analysts are more bullish on KPIT Technologies, where they see a return potential of 30% from current market levels, as against a decline expected for Tata Elxsi of as much as 10%. And well, that tells you a story of how things are stacked up. It was just interesting that because KPIT Technologies is not so well tracked, it would be, I was interested in as to what's going on with this company, and some very surprising results coming there.
And the management sounded very optimistic when they spoke to us as well, Agam,
yes.
KPITs.
Yeah.